the CEO of Kalamazoo County State Bank in Schoolcraft, Michigan, founded in 1908. Mr. MacPhee is testifying on behalf of Independent Community Bankers of America. ICBA represents 5,000 community banks of all sizes and charter types throughout the United States. Thank you. You will have 5 minutes.
Thank you, Chairman Velasquez, and Ranking Member Graves. I am pleased to represent the 5,000 members of the Independent Community Bankers of America at this timely and important hearing. Just over 1 year ago, due to the failure of some of the nation's largest firms to manage their high-risky activities, key elements of the nation's financial system nearly collapsed. Community banks and small businesses, the cornerstone of our local economies, have suffered as a result of the financial crisis and the severe recession sparked by megabanks and unregulated financial players. In my state of Michigan, we face the nation's highest unemployment rate of 15.2%. Yet community banks like mine stick to common sense lending and serve our customers and communities in good times and in bad. The bank has survived the Depression and many recessions in our more than 100-year history, and it proudly serves the community through the financial crisis today, without TARP money, I might add. The financial crisis, as you know, was not caused by well-capitalized, highly regulated, common-sense community banks. Community banks are relationship lenders and do the right thing by their customers. Therefore, financial reform must first do no harm to the reputable actors like community banks and job-creating small businesses. For their size, community banks are enormous small business lenders. While community banks represent about 12% of all bank assets, they make 31% of the small business loans less than $1 million. Notably, half of all small business loans under $100,000 are made by community banks. While many mega banks have pulled in their lending and credit, the nation's community banks are lending leaders. According to an ICBA analysis of the FDIC's second quarter banking data, community banks with less than $1 billion in assets were the only segment of the industry to show growth in net loans and leases. The financial crisis was driven by the anti-free market logic of allowing few large firms to concentrate unprecedented levels of our nation's financial assets, and they became too big to fail. Unfortunately, a year after the credit crisis was sparked, too big to fail institutions have gotten even bigger. Today, just 4 mega firms control nearly half of the nation's financial assets. This is a recipe for future disaster. Too big to fail remains a cancer on our financial system. We must take measures to end too big to fail by establishing a mechanism to declare an institution in default and appoint a conservator or receiver that can unwind the firm in an orderly manner. The only way to truly protect consumers, small businesses, our financial system, and the economy is to enact a solution to end too big to fail. To further protect taxpayers, financial reform should also place a systemic risk premium on large, complex financial firms that have the potential of posing a systemic risk. All FDIC-insured affiliates of large, complex financial firms should pay a systemic risk premium to the FDIC to compensate for the increased risk they pose. ICBA strongly supports the Bank Accountability and Risk Assessment Act of 2009, introduced by Representative Gutierrez. In addition to a systemic risk premium, the legislation would create a system for setting rates for all FDIC-insured institutions that is more sensitive to risk than the current system and would strengthen the Deposit Insurance Fund. ICBA strongly opposes reform that will result in a single federal bank regulatory agency. A diverse and competitive financial system with regulatory checks and balances will best serve the needs of small business. Community bankers agree that consumer protection is a cornerstone of our financial system. However, ICBA has significant concerns with the proposed Consumer Financial Protection Agency. Such a far-reaching expansion of government can do more harm than good by unduly burdening our nation's community bankers who did not engage in the deceptive practices targeted by the proposal. It could jeopardize the availability of credit and choice of products and shrink business activity. In conclusion, to protect and grow our nation's small businesses and economy, it is essential to get financial reform right. The best financial reforms will protect small businesses from being crushed by the destabilizing effects when a giant financial institution stumbles. Financial reforms that preserve and strengthen the viability of community banks are a key to a diverse and robust credit market for small business. Thank you.